Hey everybody, this is Richard, and today I'm going to be going over a day trade long that triggered on Friday the 24th of June. It was a really good trade. We actually ended up walking away with a real solid gain of about 20% on this trade, or about $3,000 per unit traded. But before we look at it, let's go ahead and look at the risk disclosure. So feel free to pause the screen if you need to. Remember that trading futures does involve substantial risk of loss. It's not appropriate for all investors. And also keep in mind that past performance is not indicative of future performance. Finally, I'm not a CTA. We offer the algorithms under what's called a letter of direction. All right, so let's go ahead and look at the trade that we had now. Okay, so if you've seen the other trade review videos that I've done, you'll know that this is just the version of the TradeStation platform that I use to develop the algorithms. And this just shows a trade that triggered along with the stop and then what the profit and loss is on the trade as well. So if you look over here, the top right chart is just the 9-minute candle, and you can see the little blue arrow that shows that we got into the trade. You can see the line that goes across, that's just the stop that was placed, and it's about a $400 stop from the entry. And then on the left, you'll see the matrix, and what this shows is it's really just showing the profit or loss as the day goes on. And so right now this trade is up about $200 is what it shows. Finally, the bottom chart is the same. It's the S&P E-minis, same as the top chart, only it's a 1 minute. And I just show that so that you can see a little bit more the kind of minute by minute. But let's go ahead and look at what happened throughout the day with this trade. Okay, now the first thing I'd like to highlight is when we get into this day trade long, a lot of times the very first candle is pretty important, because when we get in, we have a pretty tight stop. The stop is about, well, it's about $350, but in this case about $400 when you count a little bit of slippage. But that's a pretty tight stop. So the very first candle, once we get in, usually is relatively important, because what we want is to see a little pop like we actually did today or on this day. And so it gave us a little bit of a buffer. But I'm going to speed up the time a little bit now so that we can see what happened. But what you're going to notice is the profit and loss goes from around $100 to well over $1,000 really quickly. And I believe what happened is there was some kind of economic news announcement. You'll see it here in a second, where it just really starts to pop and go higher. Okay, and right here is where you see it. Notice how the profit went from up 100 to up about 500, and then now it just keeps going higher. Well, that's obviously exactly what we're looking for, is some kind of really big move to get us away from the stop. Because what will happen is this algorithm will hold on to this trade usually until the end of the day, but there are times when it can exit a little early. But in this case, it's up about $800 now, and then as the day goes on, you'll see it just go up to about $1,500 relatively quickly. Now at this point the trade is up about $1,500, and I'll speed it up real quick now, because we do end up holding this trade until the end of the day. And so obviously you don't want to be sitting here watching this for hours. So I sped it up really quick so that you can see. But what I want you to just think about is, if you were day trading this on your own, there might have been points where you would have gotten scared or maybe gotten out. Maybe every time you have these little dips, you would have been a little worried and possibly gotten out and instead of kind of letting it run. But notice how now it's actually up about $2,000. And remember, this is per $15,000 traded. So this trade is already up over 10%. And what you'll see is, again, as the day goes on, is that this algorithm just continues to do really well, and it actually had even more gains. So let's give it a second here, and you can just watch it play out. But again, the top chart's the 9-minute candles, the bottom chart is the 1 minute, and that's just showed so that you can see a little more granularity. But notice how it's just hovering around the $1,800 in profit zone. But pretty soon here, I believe it pops out of this range again and has another leg higher. Yeah, see, it's already at $2,000 now, but eventually it's going to hit about $3,000. And so again, a $3,000 gain per unit traded, which is obviously a really solid gain. So now let's go ahead and keep watching it, but you see it get out of the range. Now the algorithm is up about 2,500, 2,800. It actually hits about 3,000 now. And eventually we see it get out. So now I'm going to slow the video down again, and just so that you can see the exit. But again, these are fully automated trading system. It's 100% automated. The Geronimo trading system trades this algorithm, which is the day trade long. It also trades the day trade short, and then the put spreads, which are bullish put spreads that it'll place. Those three algorithms combined represent the Geronimo trading system, and it trades in $15,000 unit sizes. So the gain that we saw today, which was about a $3,000 gain per unit traded, that just means that if somebody started with a 15K account, they would have had about 18K by the end of the day. Just remember, past performance is not indicative of future performance. There's definitely risk involved in trading futures, and it's not for everyone. Thanks a lot for watching, and I hope you have a great day. Bye-bye.